This wasn't a lucky shot. This wasn't a missile fired in anger. This was a sequence, calculated, deliberate, and executed in perfect order. Step 1, blind it. Step 2, paralyze it. Step 3, destroy it. And now, America is standing in the Gulf with no early warning, no radar lock, and no interceptor left to fire. What comes next? Nobody is prepared for. Welcome to Currency Archive. Now, before we go any further, if you haven't subscribed yet, think of it like this. You know that one elder in the family, wise, experienced, seen it all, who still somehow misses the most important news of the day. Don't be that person. Hit subscribe right now so Currency Archive finds you before the news does, and tell us in the comments. Where in the world are you watching this from today? On a quiet morning somewhere above the Gulf, 3 signals disappeared from a radar screen. Not because of a technical malfunction, not because of a power outage, but because someone, thousands of miles away, had already planned exactly which systems to destroy, in exactly which order, and why. That sequence is what this story is about. For years, the United States military positioned itself in the Gulf with what it believed was an impenetrable shield. Billions of dollars in early warning systems, fire control radars, and interceptor batteries formed a layered defensive architecture designed to detect, track, and destroy any incoming missile threat before it could reach its target. Military planners called it multi-layered defense. They called it the gold standard of missile protection. They believed it was untouchable. The IRGC Aerospace Force studied it differently. They did not look at the system as a wall. They looked at it as a chain. And every chain, no matter how expensive, no matter how technologically advanced, has a sequence of links. Break the right links in the right order, and the entire chain collapses on its own. That is precisely what happened over 5 days in the Gulf. The first strike targeted the AN/FPS-132 Block 5 early warning radar, positioned at the Al Udeid complex in Qatar. This was not a random target. This was the system's eyes. The AN/FPS-132 is a $1.1 billion radar platform capable of detecting incoming threats from 5,000 kilometers away. It is the system that gives U.S. forces time to calculate trajectory, time to prepare a response, time to fire an interceptor before a missile reaches its terminal phase. Without it, defenders are not slower, they are blind. The radar was destroyed. The second strike moved to Al Ruwashi base in the United Arab Emirates. The target was the TPY-2 fire control radar, the dedicated tracking system assigned specifically to the THAAD battery. This distinction matters enormously. The THAAD interceptor battery does not operate independently. It requires precise, real-time targeting data fed directly from its fire control radar. The TPY-2 calculates exact trajectory, speed, and intercept point for every incoming threat. Without that data, the THAAD launcher cannot aim. It cannot engage with accuracy. It becomes, in military terms, operationally inert, a sophisticated and extraordinarily expensive system that can no longer perform its single purpose. The radar was destroyed. By this point, something important had already happened that most analysts missed entirely. The THAAD battery was still physically intact. The interceptors were still loaded. The American personnel stationed there were still present. But the system was already finished. Not because it had been hit, because it had been made useless. The IRGC understood something that takes years of strategic study to appreciate, that destroying a weapon is far less efficient than destroying a weapon's ability to function. One costs more missiles, the other costs almost nothing in comparison. The third strike came on day 5. By then, it was not a military challenge, it was a formality. The THAAD battery itself, valued between $1 billion and $1.8 billion, was struck and destroyed. The interceptors, which travel at Mach 8 and are designed to eliminate ballistic missiles in their terminal phase, never fired. They had no radar to tell them where to look. The United States lost its early warning system in Qatar. It lost its fire control radar in the UAE, and it lost its interceptor battery, the last physical layer of its missile defense architecture in the region, shortly after. What the world witnessed was not simply a military strike. It was a masterclass in systems-level thinking applied to warfare. The IRGC did not attack hardware. They attacked logic. They identified the precise sequence in which a $3 billion defense architecture could be rendered worthless. And they executed that sequence with a discipline and patience that no defense contractor had ever designed their systems to survive. The chain did not break under pressure. It was taken apart, one link at a time. And when the last link fell, there was nothing left standing between Iran's missile force and everything the United States had been protecting. There is a number that the Pentagon does not want discussed in public, not in congressional hearings, not in defense budget briefings, not in the carefully worded press statements that followed the events in the Gulf. The number is 12. 12. That is how many new THAAD interceptor rounds the United States received in the entire 2026 fiscal year. Not 12,000, not 1,200, 12 rounds. for a system that just lost its entire forward-deployed battery in one of the most strategically critical regions on the planet. To understand why that number matters, one must first understand what was actually lost. Not in emotional terms, not in political terms, but in the cold, precise language of industrial capacity and strategic mathematics. A single THAAD interceptor round costs approximately $10 million to produce. The battery destroyed in the Gulf carried an estimated 150 ready interceptors. Replacing those 150 rounds at current production rates would take over 12 years. Lockheed Martin has publicly committed to a production surge. RTX has outlined expanded manufacturing targets for the PSE-3 MSE system that operates alongside THAAD architecture. But commitments printed in annual reports and actual rounds sitting in launch canisters are two entirely different realities. And right now, the reality is 12 rounds in a fiscal year, against a replacement requirement of 150. This is not a temporary supply chain problem. This is a structural production crisis that has been building quietly for over a decade. And the events in the Gulf did not create it. They simply exposed it in a way that can no longer be explained away. Here's what that exposure actually means. When military planners design a forward defense posture, they operate on a fundamental assumption that the systems they deploy can be replaced, reinforced, or replenished within a reasonable operational timeline. That assumption is what gives deterrence its credibility. An adversary looks at a deployed THAAD battery and calculates not just what it sees today, but what America can put back in its place tomorrow. When that calculation changes, when the adversary understands that replacement takes 12 years and resupply delivers 12 rounds annually, the deterrence value of every remaining system in the region drops accordingly. Iran's military planners understood this arithmetic before the first strike was ever authorized. But the production crisis is only half of the blind spot. The other half lives inside the system's design itself, and it reveals a vulnerability that billions of dollars in procurement spending never actually solved. THAAD was designed and marketed as a terminal phase interceptor. Its entire operational concept is built around the final moments of a ballistic missile's flight, the point at which the threat is descending toward its target and moving at maximum speed. The kinetic kill vehicle, traveling at Mach 8, is designed to physically collide with the incoming warhead and destroy it through force of impact alone. No explosive warhead, pure kinetic energy. It is, by any measure, an extraordinary piece of engineering. But extraordinary engineering has an extraordinary dependency. The intercept calculation required to place a Mach 8 kill vehicle in the precise path of an incoming ballistic missile demands real-time data of exceptional accuracy. Trajectory angle, velocity vector, atmospheric drag calculation, and intercept geometry must all be processed and updated continuously from the moment of detection to the moment of intercept. That data comes from one place, the fire control radar. Remove the radar, and the kill vehicle has no intercept solution. It has no flight path. It has nothing to chase. This is the blind spot that $3 billion in Gulf-based missile defense spending left completely unaddressed. The system's most critical vulnerability was not its interceptors. It was the single point of failure that every interceptor depended on, and that single point was protected with far less redundancy than the price tag suggested. The business community understands this concept immediately. Any serious entrepreneur or executive who has managed a supply chain, a production line, or a critical infrastructure project recognizes what happens when an entire operation depends on one component with no backup. It does not matter how sophisticated the rest of the system is. When the single point fails, everything fails with it. America built a $3 billion system in the Gulf with a single point of failure. Iran found it, and now the Gulf is a different place than it was 5 days ago. When a powerful structure collapses, most people watch the falling debris. Very few look at the empty space it leaves behind. That empty space, the vacuum, is where the real story begins. And right now in the Gulf, there's a vacuum forming that is moving faster than any missile ever could. It does not travel at Mach 8. It travels through phone calls between foreign ministers, through emergency cabinet meetings held behind closed doors, through quiet conversations between sovereign wealth fund managers and their risk teams, through shipping companies rerouting vessels before the insurance premiums make the original route financially impossible. This vacuum has no radar signature. No satellite imagery can capture it. But its consequences will reshape the economic and strategic geography of the Middle East for the next generation. Here is what is actually happening. For decades, the Gulf Cooperation Council states, Saudi Arabia, the UAE, Qatar, Bahrain, Kuwait, and Oman built their entire security architecture on a single foundational assumption. That assumption was simple. America's military presence in the region was permanent, credible, and capable of absorbing any threat before it reached their soil. Every defense agreement, every basing arrangement, every foreign policy calculation made by these governments operated on that assumption as its bedrock. That bedrock just cracked. The UAE hosted the fire control radar that was destroyed. Qatar hosted the early warning system that was eliminated first. These are not peripheral American allies. These are the two countries that have collectively invested over $100 billion in U.S. defense partnerships, military infrastructure, and security cooperation over the past 2 decades. They did not just lose American hardware stationed on their soil. They watched that hardware get systematically dismantled while it was sitting inside their borders, and they could do nothing about it. The message that sends to every Gulf capital is not subtle. It says that hosting American military infrastructure does not guarantee protection. It may, in fact, make a country a higher value target. That calculation is already changing behavior. Saudi Arabia, which has spent years quietly expanding its defense relationship with China through the Huawei infrastructure controversy and multiple bilateral agreements, is now accelerating conversations that were previously kept at a diplomatic distance. The Crown Prince's government is not abandoning its American relationship, but it is doing what any sophisticated actor does. When its primary security guarantor shows a critical vulnerability, it is diversifying, quietly, deliberately, without announcing it on the front page. The UAE is having a different but equally significant internal conversation. Abu Dhabi's sovereign wealth funds, among the largest pools of institutional capital on the planet, operate on long-horizon risk models. Those models just received a significant input update. When the security architecture that protects the world's most critical energy infrastructure demonstrates a structural failure, institutional capital does not panic. It repositions, slowly, methodically, and in ways that only become visible months later when the data is aggregated. Qatar is perhaps the most strategically exposed of all three. Al Udeid Air Base, the largest U.S. military installation in the Middle East, sits on Qatari soil. The early warning radar that was destroyed was part of that installation's defensive umbrella. Qatar now faces a question that no amount of diplomatic language can soften. If America could not protect its own radar system inside its own largest regional base, what exactly is the security guarantee worth? These are not rhetorical questions. They are the actual questions being asked in actual meetings right now. And then there is the Strait of Hormuz. 20% of the world's total oil supply passes through a waterway that is 21 miles wide at its narrowest point. Every single day, tankers carrying crude oil, liquefied natural gas, and refined petroleum products move through that strait on a schedule that global energy markets depend upon with absolute precision. The insurance frameworks, the shipping routes, the forward energy contracts, all of it is priced on the assumption that the strait remains navigable without extraordinary risk premium. That assumption is now being stress tested in real time. When America's missile defense architecture in the Gulf collapses, the Strait of Hormuz does not close overnight, but the risk premium attached to every tanker moving through it starts climbing quietly. And when risk premiums climb in energy markets, everything else follows. There's a concept that separates serious investors from noise followers. It is not complicated. It does not require an advanced degree in economics or a seat on a trading floor. It simply requires the discipline to stop looking at what just happened and start asking what happens next because of what just happened. That is the second order move. And right now, in the aftermath of the most significant collapse of American forward missile defense in a generation, the second order moves are already in motion. Most people are still watching the debris. The serious money is already looking at the empty space. Here is what that empty space looks like in the language of capital, commodities, and strategic positioning. The first and most immediate second order move is in energy. Oil and natural gas markets do not wait for confirmation. They price risk before it materializes, because by the time risk materializes, the repricing has already happened and the opportunity has already closed. The Strait of Hormuz vulnerability, which was theoretical 20 days ago, is now a documented operational reality. Insurance underwriters who cover tanker routes through the Gulf are not waiting for a second incident. They are repricing now. Shipping companies are recalculating route economics now. And energy traders who understand that 20% of global oil supply flows through a strait that just lost its primary missile defense coverage are adjusting their forward positions now. For the business community, this is not abstract geopolitics. This is input cost arithmetic. Every business that depends on energy, which is every business, is now operating in an environment where the risk premium attached to Gulf energy supply has permanently shifted upward. That shift may be gradual. It may be punctuated by moments of acute volatility, but the direction is no longer uncertain. The second order move is in precious metals. Gold and silver do not rise because wars happen. They rise because confidence in the systems that manage risk, military systems, monetary systems, institutional systems, begins to erode. What happened in the Gulf was not just a military event. It was a confidence event. It demonstrated, with $3 billion worth of destroyed hardware as evidence, that the most expensive defense architecture America deployed in its most critical strategic region could be systematically dismantled by an adversary who studied its logic carefully enough. When confidence in military deterrence erodes, confidence in the dollar's role as the ultimate safe haven instrument comes under quiet but persistent pressure. Not immediately, not dramatically, but consistently. And gold, which has historically absorbed every major episode of dollar confidence erosion since Bretton Woods, is already reflecting that pressure in its price behavior. Silver follows a different but equally important logic. It is not just a monetary metal. It is an industrial metal embedded in defense manufacturing, electronics production, and the precision guidance systems that modern militaries depend upon. When defense budgets surge in response to a deterrence failure, and they always surge, industrial silver demand moves with them. The production timelines at Lockheed Martin and RTX are not just defense stories. They are silver demand stories, and the entrepreneurs and investors who understand that connection early are positioned differently from those who discover it 6 months later. The third second-order move is in the geography of capital itself. Gulf sovereign wealth funds, which collectively manage over $3 trillion in assets, are not passive observers of the events unfolding around them. They are sophisticated, long-horizon institutional actors who operate on risk-adjusted return frameworks that are updated continuously. When the security architecture protecting their home region demonstrates a structural failure, their asset allocation models do not stay static. Capital that was comfortable sitting in Gulf-adjacent positions begins looking for exits that are quieter, slower, and less visible than a headline. That capital moves into hard assets, into gold, into agricultural commodities, into infrastructure and geographies that sit outside the immediate blast radius of Gulf instability. And when $3 trillion in sovereign wealth begins a quiet reallocation, the ripple effects reach every asset class, on every exchange, on every continent. History is precise on this point. Every time a superpower's forward deterrence failed in a critical region, the British withdrawal from east of Suez in 1968, the American exit from Vietnam in 1975, the Soviet collapse in Afghanistan in 1989, the capital markets did not react to the military event itself. They reacted to the vacuum that followed, to the repositioning, to the new calculations being made by every actor who had previously operated under the assumption that the dominant power's protection was permanent. That vacuum is open right now. The question for every serious entrepreneur, every business owner, and every investor watching this is not whether the world just changed. It already has. The question is whether they are still watching the debris fall, or whether they are already moving into the space that the debris left behind.